Ladies and gentlemen, I welcome you all to the H1FY25 post-earnings conference call of Krishnadefence and Allied Industries Limited. Today on the call from the management team, we have with us Mr. Ankur Shah, Managing Director, and Mr. Piyush Patel, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to run us through the investor presentation for the quarter, giving us brief business and performance highlights, followed by the growth plan and vision for the coming years, post which we will open the floor for Q&A. Over to you, sir.
Thank you very much, Vinayji. Good afternoon to everyone, and thank you for removing time and coming for our half-year H1 FY25 presentation. The structure for this will be that I'll just run through quickly the presentation for the first 5-10 minutes, and we'll have our CFO run through the financials, and we'll open the floor as Vinayji has mentioned. So some of you know about the company, but still I'll just run through it real quick. So of course, we are Krishnadefence and Allied Industries Limited. The company was started by my father, late Mr. Ashwin Shah. He was a double engineer himself. We have operations in Gujarat, in Halol, and in Kalol. In Halol, where we manufacture the equipment related to the defense industry, and at Kalol, we manufacture the dairy, which is our traditional business. We have our offices in Mumbai and in Vadodara, and just last year we opened our office for our subsidiary company in Bangalore right now, and we are adding on some facility at that point of time. Glad to share that this year the split has been more towards the defense as compared to the overall. About 94% contribution come from the defense sector and about 6% from the dairy for this half year. These are the products that we manufacture. These are bulb bars, the well consumables, as we can see on screen. All of them are used for hull construction of naval warships. And I'm glad to share that we've also now got enlisted for American Bureau of Shipping and DNV, hence opening up our application of these products also for Coast Guard and other vessels that the shipyards in India are building. On the left is the ballast brake HVF. We are very happy to share that we are the only company in the country that's supplying these armored steel profiles, which are used for manufacture of T90 tanks by Heavy Vehicle Factory of the near Chennai. On the right is the Bukhari, for which we have a TOT, which is a product used like a room heater for our army soldiers at high altitude to keep the room warm. These are our defense clientele, the Army, the Navy, all the top shipyards in the country, DRDO, Border Security Force, and AVNM, which is HVF. In the dairy equipment segment, we started with the manufacture of stainless steel milk cans, robotic milk collection units, milk cooling tanks, so on and so forth. Most importantly, the way forward on how we see things for us going forward. Since we successfully did the well consumables for critical naval platforms and shipbuilding, the ships that is there, we've been also approached by other organizations like ISRO and BRC to develop specific well consumables which otherwise were being imported. So we worked as an indigenizer and successfully indigenized a lot of the steel components that the shipyards were otherwise importing. For our new subsidiary division that started for wave optics, we are working on radio frequency and microwave optical fiber. I'm glad to share that there has been good progress on that front. Although it's just been the company's established only in October 2023, we've made very, very good progress on that front. And recently we've signed up a JV with a Netherlands-based company for manufacture of composite door and hatches, which is used by the Navy to replace the existing steel door and hatches. This is slightly more in detail about the optical fiber and the applications that are working towards the same. At the composite door hatches, we have successfully done the trial at one of the naval ships, and the trial reports are very successful, and we are hopeful that once the trials are successful, we will start getting orders of the same. Initially small orders, but the order volumes will keep increasing as we move forward. This is a typical Make in India. Under the Make in India, we've done this. We've brought in the technology from Netherlands. They are one of the largest manufacturers in Europe for these these kind of products, and we'll be partnering with them and manufacturing these products within India, not only for the Indian market, but also to be able to export to Middle East and Southeast Asia. As committed, we stand by the growth potential that we see for our company. We see ourselves growing at about close to 40% CAGR for the next 3 to 5 years, keeping in mind the product portfolio that we have and the demand that is being generated right now from the naval and the army side per se. I'll hand it over to Piyush Bhai just to run through the financial highlights. Over to you, Piyush Bhai.
Yeah, thank you, Mr. Ankur. Good afternoon, ladies and gentlemen. I welcome you all to the earning updates conference call of the company for the H1FY25. Starting with the financial highlights, total revenue of the company stood at 940.4 million in H1FY25 as against rupees 352.3 million in H1FY24, thereby showing a growth of 267%. The company reported EBITDA of rupees 141.4 million in H1FY25 as against rupees 47 million in H1FY24, a growth of 301%. EBITDA margins have increased to 15.04% in H1FY25 as against 13.34% in H1FY24, a rise of 170 basis points. PAT of the company surged by 403% to rupees 106 million in H1FY25 as against rupees 26.3 million in H1FY24. PAT margins have increased to 11.27% in H1FY25 as against 7.46% in H1FY24, thereby showing a jump of 381 basis points. Once again, thank you all, and over to you, moderator.
I'm glad to share that this particular half year has been the highest ever revenue that we have clocked at about 94 crores. Our order book at the beginning of the financial year stood at about close to 186 crores. We've received orders worth about 190 crores in the 6 monthly time. And even post successful execution of about 94 crores, our closing order book as on 30th of September stands at about 282 crores, out of which majority of them is towards defense. So if we see in terms of percentage to the revenue front, we are about 2.7 times our FY24 revenue of about 106 crores, as we can see. These are just different representations of the same thing, as we can see about the revenues number that Piyush has already spoken, the EBITDA numbers and the net profit numbers. All these details have been shared on the NSE presentation, talking about in detail about the P&L and the balance sheet. Not taking much time, I will hand it over to the moderator to start taking in questions. So I think that'll be a better interaction for all of us. Yeah, Vinayji, over to you.
Yeah, thanks, Ankur. You can stop the sharing of the presentation. We'll take the first question from Agastya Dave. Agastya, can go ahead.
Audible, Vinay bhai?
Yeah, you're audible now.
Am I audible?
Yes.
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 Thank you very much for the opportunity. Thank you, Ankur bhai, for the presentation and great performance this quarter. Sir, I have one question directly related to what you were just sharing. Slide number 21 on the presentation. It talks about your order inflows and your closing order books, order book size.
Right.
So, given the massive amount of orders that you have received in the first half, would there be any? So, first of all, are there any bottlenecks now inside the company, which could slow down your execution? I mean, the order book has doubled. But should we expect the turnover to jump much more than what you were initially thinking? Let's say when we last had a concall. Are there any bottlenecks in terms of execution capability or management bandwidth, which may prevent you from actually accelerating your growth further?
Right. Interesting questions, Agastya. On what we have done in terms of bottleneck to to take care of the orders that we have in hand. Of course, we have now, as I mentioned, about 2.8, 2.7 times the order book compared to the FY24 revenue. It's a very large number to what we have to do, but we were anticipating these kind of orders to come through. And in order to increase our capacity, and increase our installed tonnage that is there, with the facility should be up in place by about January this year, and we will be in a good position to successfully execute the orders that we have and in time. So we have accounted for the growth potential by adding capex to our existing infrastructure.
Okay, so the upcoming capex then accounts for all of this already.
Yes.
Okay.
Yes.
So second question is the new orders which are coming in, what kind of margins do you anticipate in them? Again, there would be some benefit because of operating leverage and the new facility also. Again, operating leverage of the new facility. So how do you see the margins panning out?
Right. So it is evident from our half-yearly performance itself. The moment the tonnages have increased or the revenue has increased, you have seen an uptick in the margins going forward. Now, with more capacity or more throughput, we will also see an upside on that. Very difficult on right now for me to put a number to that, but there will be an upward swing towards that also for sure.
Is there a ceiling beyond which it is impractical for us to build expectations that we'll see such kind of margins? Let's say, can you reach 20%?
We aim to get as close to that. As close to that, and there is a possibility for us to get to that level also. Now we have a good product mix coming up, so which will help us to get to those levels. That is the target that we are focusing on.
Excellent. One final question, sir. You mentioned something about optical systems for defense and aerospace. Sir, I need slightly more detail than what you have provided so far. If you are in a position to share, what exactly are we looking at? Are these more communication related? Like, can they be used in telecom equipments also, or is it purely focused on defense applications? Would you require any certifications? What kind of field testing needs to be done? By when? What kind of timelines can we expect? By when we will see the first order coming in, and then the commercial revenues kicking in, and finally the margins here also, and also the potential of this business?
Yeah. So we have already executed orders about close to 3.5 to 4 crores for the same. This was supplied to L&T Defense or further supplied to the Indian Army Division. The products that we have made are military grade that is there. In terms of other telecom applications, currently our focus is not on that perspective. We are more focused on the defense side of it because we see that we have a forte on that side. These are complex equipments where the SATCOM telecom will not require on those. These are used to convert the radio frequency signal to optical fiber and take the signal back from optical fiber to radio frequency. So the transmission now cannot be done just over about a limit of about 500 meters for radio frequency, but it can be done 30-40 kilometers inside the border, keeping a lot of our assets very safe. So that's the end application for it. We've already bagged orders on the same, and we have other tender pipelines that we have bid for. So we are hopeful. So the revenue for the same is already in place. So it's not a trial error. We have demonstrated the product and we're getting orders for that.
Perfect, sir. Thank you so much for answering all the questions. All the best, sir. Great performance this quarter. Keep it up, sir. Thank you.
Thank you,
Vinay.
Thank you.
Agastya. Now we'll take next question from CA Garvit Agarwal. CA Garvit, you can please go ahead.
I'm audible?
Yeah, you're audible.
Good afternoon, sir. Congrats for a good set of numbers. Again, my first question is on the order book side only. So what is the execution period for this current order book that we are having? And secondly, like what kind of bid pipeline do we have right now? And what's the amount of orders do we expect in second half to come into the company?
Right. In terms of the order pipeline to be executed that we already have, some of the orders have to be done about 12 months time, some in 18 months time, but majority of the orders will be executed within this time frame, between the 12 to 18 months time frame as we speak, because some of the orders have come just in the month of about August, September. So that is how we take at it. In terms of the order pipeline that we expect for the next 6 months to come through, we have bidded for several projects, about close to 200-300 crores that is there. So we expect orders to come through in that range for us also going forward. Right now, the focus is on successful execution of the orders that we have in place.
This number you mentioned, 200 to 300 CR, is it the entire bid line, or this kind of order do we expect to come into us?
No, this is the bid line. This is the bid line for us.
And what is the success ratio in the recent past, or considering the past?
About 50% has been our success ratio.
Got it, sir.
Yeah.
And secondly, sir, I was looking at the historical numbers. We as a company are delivering H2 better than H1, right? So in this particular year, we have delivered significantly well in H1. So do you expect H2 is going to be better than this number that we have delivered?
Yeah.
Backed by the order book that we have?
Ankur, that's a forward-looking statement. You can decline to answer it specifically. Yeah.
Yeah. So we want to try to balance off all our quarters because that helps in our financial arrangement. That's what we have been focusing upon. That's what we want to work on.
Got it, sir. Coming to our new venture in the defense electronics at Bangalore, I want to just ask what kind of products that are currently into R&D, and what is the size of opportunity we are targeting via those products in next, say, 2 to 3 years, and what are the products basically we are going to launch, say, in the near term?
So we've already made a product which I mentioned, which is the radio frequency optical fiber converters. Now we've identified one application that we are already doing. Now we are expanding the application of the product to different end users. So it's just minor changes in the spec modification in order. So to give you an example, right now we are able to translate up to 6 gigahertz of frequency. We want to uptake to 40 gigahertz, right? So those are other applications that will come into place. In terms of order opportunity, even the product that we have currently done, that itself has a very, very large order potential. What I understand, in the next 2 to 3 years, we see an order potential about close to about 200 odd crores within the same space in the product that we've developed. If you are able to successfully pull the product in other end-use application, the addressable market increases even further.
Got it, sir. I'll join back the queue, sir. Thank you.
Thank you.
Thanks, Garvit. We'll take next question from Mr. Pratik Chaudhary. Pratik, you can go ahead, please.
Yeah. So this 200 crore orders, you said this was for wave optics, right? Potential.
Yes. Because yes, Mr. Garvit asked on defense electronics, so I answered on that front.
Right. And any other products that we haven't yet disclosed that we are probably working on, which could become very big for us?
There are a few products that we're working on, but it's too nascent to talk on those right now. Because, in terms of defense, we've always been innovator. We keep looking at doing different products. Because, if you work on newer products from now on, the gestation period about 2 to 3 years. There are several other products that we are working on right now, but it may be too premature to talk on the same right away.
Okay. And this recently the government, approved 2 nuclear submarines to be built. Would our products find application there, and what could be the target size of those orders, and how soon could we sort of get them?
Definitely we will have something to supply in the orders in the 2 projects that you're mentioning about. By when it will be done and how much will be done, it is too premature because it's still at the PMO level. The file will come, it'll still take some time to do. So by when it will happen, not very clear idea, but I expect at least about 12 to 18 more months time. And about what percentage will be our application, too early to call because the designs and all are still under consideration right now. But we will have a good role to play. That's what I can say.
Okay. But typically, if such a because you may have similar numbers for other ships that are built, the value of material that goes in there for your bulk
Right.
bars and other products. So
Right.
roughly, what would be that number in the range of for these submarines per submarine?
So the calculation for a surface ship as for an underwater boat are very different. So very difficult to estimate on those numbers. These design features are not shared openly like the way it is shared with surface ship. Surface ship details are available freely, but when it comes to underwater boats, these things are not available. So very difficult to put a number to that. But again, like we have supplied for the earlier platforms, we will also have 100% a role to supply to these also.
Okay. And sir, last question on composites.
Yes.
What kind of scale up could we see in FY26 on the composite side in terms of potential revenues?
Um, we have started to build, the steel components which are related for the composites required, in terms of hinges, the locks, and the frame, the combing around. So we started to work on that, and we expect that the facility should be up and running, say early by Q1, 100%. We should be able to manufacture everything within India. And that much time will be there for the trial errors and the trial orders that we'll be able to execute, and then the field trials for the same. So the initial FY26, the numbers may not be very high. It would be in the range of about 10 odd crores that is there. But following year, we will see a large number of the application for these, because it will take time. It's a new product completely introduced first time in the Navy. So it will go gradually within all the ships.
Right. And the first half, if we compare first half and second half for FY24, roughly first half contributed 33%, roughly that number, and second half was almost 67 to 70%. Would this year be somewhat similar?
Again, this is the same question that I answered. We want to try to balance off all the quarters, because the finances are unhappy, because we don't want to offshoot just happening in the last quarter that is there. We've been working very hard to ensure that we are balancing all the quarters correctly in terms of supply. That helps our working capital cycle and everything, because everything is skewed in favor of Q4 and Q3. Then the fund requirement goes very high. We've been trying to balance, and I would say we've been successful at a great extent to that.
So 60-40 would be a good number to expect this year.
You can expect something closer to that.
Okay. Thank you, sir. I'll get back with you, and all the best.
Thank you.
Thanks, Pratik. We'll take the next question from Mr. Krishna. Mr. Kush, you can go ahead, please.
Hi, sir. Thank you for the opportunity. So 2 questions, sir. First, our raw material cost is up this H1 at 57% versus our previous half yearly. And second question is, so what kind of opportunities we see in the commercial shipbuilding? And, will the competition be more there, since it is a less rigorous evaluation process compared to defense? So coming to the first question, any particular reason raw material cost?
See, raw material, with our 280 crore order book in hand, so all the raw material is also stocked up for the orders in hand. So, to take that as the number literally may not be correct, right? Because we also have to cater to upcoming orders, it's WIP, so on and so forth. Hence, the numbers are looking like that. But in terms of per kg cost, you can expect it is the same at what used to be a year back. There's been marginal difference on that front, if that's what your concern is.
Yes. So on a yearly basis, we can see the 55% as a raw material cost.
Yeah, but that is a percentage of the sales that you're saying.
Right.
Of sales. That's why what I'm trying to come to is that we also have raw material inventory, right? So that's how the figure is looking higher. So some stock is in forms of sales also, or in WIP also.
So accordingly, what would be a ballpark number for our gross profit margins going ahead?
As I mentioned about the EBITDA numbers that are there, with the scale of economics coming in, we will see an uptake on the EBITDA numbers going forward.
Okay, sir. And on the second question regarding commercial shipbuilding.
Honestly, Mr. Kush, commercial shipbuilding in India is not very big per se, although we are supplying for a couple of vessels that Cochin Shipyard is doing. But those numbers are not very large. Number of commercial ships being made in India is not very large. We contribute very small percentage of that. Most of the shipbuilders in the country are focusing on defense and homeland security, like Coast Guard vessels, and that's what we are aiming for. So commercial ships application is there, but volumes are not very high.
All right, sir. Thank you.
Thank you.
Thank you, Kush. We'll take a follow-up question from Mr. Gavit. Mr. Gavit, you can unmute and go ahead, please.
Thanks for the follow. Sir, like you mentioned about the radio frequency product and finding the different applications and kind of opportunity in this particular product, only 200 to 300 CR, right? And apart from that, having some new products at the nascent stage. So my question is apart from leveraging the domestic tailwinds, how do we see exports as an opportunity here? Do we have any plans in this direction?
Currently, we are focusing on the applications and the orders that we have in hand for us. Export is a possibility, but honestly, Mr. Gold, we are not focusing on that right now. We want to try to cater to the Indian Army's requirement because we see a huge potential within this for it right away. And export, there is a possibility to export, but our focus is not on export currently.
And the products that we are bidding for, what kind of competition do we see in the bidding process? Like how many players are bidding along with you in these projects?
There are a couple of companies, MNCs, which have a presence in India. I'll not name them, but they have their representations, and some of them have a small unit over there. So we are competing with both are American companies that we are competing with.
So like the number of competitors is not that much high, like the kind of product that we are doing.
Yes,
right?
yes.
Understood, sir. Thank you very much.
Thank you.
Gavit. We'll take the next question from Miss Aisha. Aisha, you can go ahead, please.
Afternoon.
Good afternoon.
Firstly, congratulations on such good set of numbers.
Thank
I wanted
you.
to know your order book has ramped up strongly. However, what we also see is the size of some of your order received are quite sizable. Is this a
Right.
trend which is expected to continue or improve considering that you're doubling capacity in Halol?
Yeah, so the number of orders and the value of the orders have increased for sure because coincidentally all the larger projects came in. So hence the volume has been, one particular order has been clubbed to over that thing. As in the trend will continue, yes and no would be the answer. It'll all depend. See, per project we get an order, right? So currently that we supplied for was a large ship. So the large ship will have a larger quantum. So the volume of one particular order was very high. Going forward, probably we'll have smaller ships, but five of those ships. So we'll have 5 purchase orders, all 5 summing to the value that we talk about a larger order per se. So I don't read too much into it per value, per order that is there. What we look at is what is the tonnage that we get to supply going forward.
Okay, thank you. Another thing I wanted to ask is, can you explain a bit about the product-wise opportunity and addressable market share for some of the key products?
Yes, surely. Bulk bars is one of the key products for us that is there. And in terms of, you see the Indian Navy's plan, these bulk bars actually used for the hull structure. So every hull structure will require these special grade bulk bars that we manufacture. And going forward, if you see, Indian Navy is looking to build about close to another 30-40 vessels in a short span of time. Now, when they're looking to do that, they will have to come forward for procurement of bulk bars. So opportunity for us is definitely going to increase from here on with our northeastern neighbor playing ball. It's very important for us to ramp up our shipbuilding capacity because we've got a very large coastline and the Indian Navy is working towards that, which also brings us a lot of opportunity for us to move forward. If you look at the capacity expansion done at Masgon Dock, at Cochin Shipyard, at Garden Reach, they're all doing this to cater to the new requirement that they are likely to see coming forward. The moment they are going to ramp up their capacity, we'll have to do equally, which is what we are doing too. So the business opportunity going forward also looks very, very bright.
Okay, noted. That answers all my questions. Thank you.
Yeah. Thank you.
Sasha. We'll take a follow-up question from Mr. Gavit. Please go ahead.
Just one last question on the capex. What is the amount of capex that we are planning to this year or say next 2 years?
So this year capex is already in place, and we have funds for that. That we, as I mentioned, we've raised a preferential round, which will take care of that. So most of our investment, the capex, should be done within this financial year. Some of it might just spill over that, but that's the add-on. But for our existing products, we are not looking to do any major capex in the next 24 months, starting FY26. And I say no capex, I'm saying no major capex coming through. Whatever will be done, we've done through internal resources. We are working on a few new projects that is there. If we see some progress on that, that's the time we may have to do some additional capex, and we will let others know at that point of time.
Got it, sir. Thank you very much.
Thank you.
Thanks, Gavit. We'll take the next question from Mr. Ajay Surya. Mr. Ajay, you can please go ahead.
Thanks for the opportunity.
Thank you.
And very good execution. Congratulations on such numbers. Sir, my question is on the Wave Optics side. Sir, if you can just clarify the percentage holding by Krishnadefence in that subsidiary, that would be helpful. And follow up on that question is, so if you can throw some light on the products, because the products which you are referring to, if you can guide us through like what sort of competition are we seeing, because even in just 6 months we have ramped up this venture quite swiftly, and it has started to contribute. But if you can throw some light on the competition, like how is it and how are we dealing with it, that will be helpful.
Great. So thank you for your question. On your first question about the stake that is there, we hold about 25% stake, which will be up to 40% as per the original agreement with them, and we are working towards that. That should happen within this next 6 months' time, starting from October onwards. And on the competition that we are doing, these are very unique and innovative products that we have done, developed in that division particularly. And as I mentioned, we are competing with 2 American companies for the supply to the Indian Army for the products that we have done. So this is kind of a niche line, requires a lot of technical and experience in the radio frequency line, which our team brings in, and hence we are able to successfully deliver these products as per the mill grade specifications of the Army. Yeah. Does that answer your question?
Yeah, but I wanted to know like in sort of bulb bars, because we are only two players are like approved vendor. So in this category also, is it something like that, or it's an open market where we are competing with other players?
The product that we have developed, I thought you were asking about the defense electronics ones, and hence that I answered. Now,
No, sir.
Okay, fair enough. So at the bulb bar front and the other products, we have one competitor in each of them. And the tenders that are floated are limited tenders per se, because this is a very critical and classified product, and it's not open-ended for anyone to come and do forward. The procedure for getting classified for manufacture and supply for this product is pretty tedious. It's about a 2 to 3 year process, and many companies have tried it, but none have been successful in the past 12-13 years to successfully do it.
No, sir. I meant to say that because we understand bulb bar has only 2 approved vendors. I'm referring it to Wave Optics, like the products which we deal in Wave Optics. Does it have similar approval process for its product? Like we get the tenders and there are only limited suppliers of those products. Just wanted to understand the dynamics. Like if we put bulb bars and the other products, like is it a limited competition market, or it's an open market where?
No, it is a limited competition market, because you need approvals to be able to bid for these kind of specific requirements, which we've been able to meet. And as I mentioned, for Wave Optics, we have 2 other American companies competing with us when we put in tenders.
That clarifies.
Yeah. Thank you very much.
Thank you.
Thanks.
Thanks, Ajay.
We'll invite two participants from the chat. I'll first invite Jatinder Agarwal. Jatir, you can go ahead.
Is this audible?
Yes.
Yeah.
Perfect. So I'm new to the business. So if I'm asking some very basic questions, if you could help me. The first is related to your asset turn in the defense business, right?
Right.
Can you explain what is the asset turn in that business? The fixed asset turn.
Okay. But it's a number, right? I didn't get what is to be explained in that. You want the number or what is it?
Yeah, I want the number. Basically, so what are we currently, what can be the technical limit in terms of fixed asset turns?
Okay. Piyush, can you answer the fixed asset
Jatinder,
turn ratio?
Yeah. In terms of turnover, I can say that asset turnover ratio is around 5 times.
5 times.
Yeah.
Perfect. And in terms of these products, right? So we do also the castings, or these are like billets that come, and how do you do it? If you could just explain that process.
Yeah. So these are special grade steels. We procure the raw material from Navy approved sources, which in our case is ArcelorMittal Steel Authority. We get the plates, we cut them into billets, we hot roll them to the particular profile, followed by hardening and the tempering process, straightening process, and then the material is supplied to the Navy post inspection by the Navy to the shipyard.
Okay. And when I look at like last 2 or 3 years, right? Exactly like it was said earlier. So we've not seen actually the fixed assets grow as such on the balance sheet, right?
Right.
Fixed assets are like what 12 crores FY23, and it is about 18 crores. And this year we should do at the current run rate, what about 200 odd crores?
Okay.
Right?
Hmm.
So how does that work? If you could explain.
We've already always built our capacity. So what you read into the previous numbers in terms of fixed asset and the revenue, that is not a current figure because we were always building capacity for the orders to come in. That is this. So we were underutilizing. Now we are optimum utilization, and now in fact we are adding, as I mentioned earlier, to keep up to the upcoming demand. This requires a lot of skill and technical expertise, which we've built over the past 12 years, not 12, but 14 years, we've built that skill and trained people, manpower. So that also is a cost because this is complex chemistry that we've been able to successfully achieve. So just to look at it, just on the asset turn ratio may not give a correct view on that. It requires a lot of technical skill. We boast about 28 young engineers who work with us from different streams. And myself, I'm an engineer, I'm a production engineer from Bombay University. We have ourselves on the strengths that we've built where we've successfully indigenized a lot of products that large companies in India were unable to do.
Okay. No, I think you're not getting. So at the current base, right? Your current balance sheet as of September, what type of sales can you do in a year?
In the current setup, the install capacity, depending on on the product, different product mix that is there, we should be able to do about 180 to 200 crores revenue out of it, depending on the right product mix that comes through. That's not question that you want to answer. But we are looking to double up our capacity so that we are able to get to 350, 400 crores, for which we already started work.
Correct. And by when do you expect this capacity to be online?
We expect by Q4 that will be up and running.
So whatever, but again, so there is cash and bank balance and there is capital WIP, right?
Yes.
So the capital WIP will get converted to fixed asset, isn't it?
But capital WIP is a very small number. No? That number is not towards that. The number is too small, right? So capital WIP is on the development front. I'm talking about the capex that we're going to do.
And that will happen in the next 6 months. Right.
It started. See, these are all tailor-made machines. This is not off the shelf that you go and buy. So orders have been placed.
Perfect.
Some erection is in state. Some the material is yet to come in. So in all, up and running, because once post even the successful installation of the equipment, commissioning and trials have to be done, which is about a couple of month process. Hence, I'm saying by Q4 we should be up and running.
Perfect. That is very helpful. Thank you. Thanks a lot.
Fantastic. Thank you so much. Thank you so much, everybody.
Take one more person from the chat, Mr. Raja Panda. Raja, you can go ahead.
Am I audible?
Yes, please.
Yeah. Congratulations, Mr. Ankur, on a very good set of numbers.
Thank
My
you.
question is on the weld consumables side. So I assume that this is the first time we have got an order on weld consumables. Is that correct?
Yes and no, but you may go ahead. I'll tell you why yes and no.
Yeah. So my curiosity is like, is this internally developed product, or have we got some kind of technology transfer from somebody, or like how we came across this product? What was the requirement from the customer, or was it our R&D which came up with this? And what are the prospects? Because this is, like you said, it is a consumable. So, normally it is seen that it is required on an ongoing basis. So what are the prospects of this product, if you could elaborate? Thank you.
Yeah. So, interesting question. This is not the first order that we've received. We had received a developmental order for this, because these grades were actually imported by the Indian Navy for manufacture of critical platforms. And it took us about 3 years to successfully develop and execute, after which it went for trials and certification, which, again, it's a long process. The material goes different parts of the world for testing, which all came successful. And post the successful result, now we have a supply order for the same. So the earlier also was an order for the same product, but that was not used on the platform. It was all used for testing, whether it qualifies and qualification. And this was all internally developed with a DRDO lab called Naval Material Research Lab in Ambernath near Mumbai. It has been developed with that, and another wing, a classified wing of the Navy, also was involved with development of these products for us.
Fantastic. So going forward, can we expect this product line also to be as big as our existing products like Bulbas?
Yes, surely. Yes, surely.
Thank you. That's it.
Thanks, Mr. Raja. We'll take a follow-up question from Mr. Kush. Mr. Kush, please go ahead.
Hi, sir. Thank you for the opportunity again. So just some clarity on the order. So I think our aircraft carrier 3 INS Vishal. So are we participating in that? Is it already done or?
No, sir, that is not yet started. Work on the same is not yet started. So it's still at the headquarters. It has to first be translated to one of the shipyards. Mostly one of the shipyards we did it last time, will surely do it. But the work on that is not yet started in terms of material procurement is not even started on that front.
So do we expect that in the next 3 years?
Wow, yeah, these are we expect it to happen in the next financial year. I hope that will come in the next financial year. That's what I'm looking at.
Okay. And so there will be some articles about, I think, Russia outsourcing to India some ice ship breakers. So any clarity on your side, like, are we expecting that, or how is it?
I'm sorry, I have no idea on that.
No. All right, so thank you.
Yeah.
Thanks, Kush. We'll take next question from Mr. Ishpreet Kaur. Ishpreet, please go ahead.
Ankur, can you hear me?
Yes, Ishpreet.
So just wanted to understand on the composite doors and hatches that you mentioned, the new product that's coming up. This would be largely replacement demand, or would this be for the new vessels that would be coming?
So the Navy is looking to do it in 2 phases. Initially, they will do for the newer ships to start in the first phase. Now, when I say first phase, probably 12 to 18 months. And because on a retrofit, things get complicated. They want to make sure that they do it in a brand new manner to see the success of the product. And if it all works well, then they will also be looking retrofit on the existing ships also.
Okay. So is it possible to get an idea on the kind of size of opportunity it could be, like on a per annum basis or on a 2-3 year basis?
Per annum basis, difficult to call because it all depends on how the Navy projects things to go forward, right?
Correct.
But on a 3 to 4 year perspective, we look at about total value addressable market in the range of about close to about close to 200 to 300 crores that is there.
Okay. And so is there like a technology fee or something that we have to give, or how is it?
No, Ishpreet, we are forming a new company with the foreign partner holding 49% stake in that, and our company hold 51% stake. So they're looking to manufacture in India not only for the Indian market but also for the Middle East and Southeast Asian market. This will be their first operation outside of Europe.
Okay, sure. And the Coast Guard ships that you mentioned, that there is now an approval that you've got for it. So, which are the other companies that are already doing for the Coast Guard, or is it that it's an import replacement?
It's a completely import replacement.
Okay. And again, any market size that you could give us an idea of?
Very difficult per se for me to give you a number on that front, but I can tell you Coast Guard is also growing as fast as the Navy because they have to protect our borders around, and we have a large coastline. So the projects, what we hear from, and this is all public information that is there, they are moving very, very fast also to catch up with the naval pace around.
Sure. Great. Thank you so much.
Yeah. Thank you.
Anybody else who wants to ask a question, please use the option of raise hand or drop a message on the chat window in case you're unable to raise hand. Ankur, since there are no further questions, would you like to give any closing comments?
Yes. So firstly, thank you once again for listening to me patiently. Some of the questions about the product, a lot of you guys know, I can see some familiar names that is there, but it's great for the new guys to understand about the product. Any of you want to ask more details can get in touch with Vinayji or myself to understand more in details. And a big thank you for all the investors and shareholders to have faith in our company and to have trust in us, because we were a very small company and we've delivered to what we were expecting. Our internal targets were there. A lot of times when I spoke about 40% CAGR, people like, are you sure you'll be able to manage that? We are very confident of pulling it through. We've done our highest revenue in this half year, and with the way things are going for us and our order book, we are confident of surpassing this also as we move forward. And so thank you all for very much for your support and the faith that you've put into us.
Thank you, Ankur. That's a very good note to end on. And
Yes.
thank you to all the participants for joining us on this call. Thank you to the management for giving us the valuable time. This brings us to the end of today's conference call. Thank you, everyone.
Thank you.